And we are live. Greetings, folks. So excited and happy to be here with you. It's been a real journey, this Crisis Investing 2020. And as you can see on the screen right now and right next to me, I have somebody who got extraordinarily high marks from the audience for Crisis Investing 2020. That's Andy Tanner. Eddie, you just did such a beautiful job in your presentation. And it wasn't just a talking presentation. You were able to actually share your screen and actually give us some lessons. And you've been recently, writing even more updates about what's going on in the world. We just saw probably the weirdest thing ever with oil, and you've got some context around all this. So in a minute or two here, we're going to dive in. But I just want to say thank you for taking your time tonight to be here with this group.
Oh, it's such an honor to be here. You guys have done such wonderful work throughout all of the revealed films. Money Revealed, and particularly giving people insight in what's a very heart-wrenching time. It's a very emotional time because this is more than just a health problem and my problem. This is a people issue. So I just am so grateful and humbled to offer what little I can to help people out. So thanks for having me.
Thanks for being here. So I'm just going to do a little bit of housekeeping here with the group, and then we're going to dive into. So
awesome.
Stand by for just a second. So for all of you, number one, I just want to say thank you for taking this ride. This was a different kind of an experience for Revealed Films. We have made several docuseries before. I imagine many of you have seen those docuseries. We're used to going out with camera crews and taking 6 or 8 months and spending hundreds of thousands of dollars to put together this content. And like everybody else, looking at what's going on in the world right now, we recognize that how we used to do things is going to change, at least for the time being. And we had to do a big pivot, and we were able to get this whole project together for you. Within some weeks, like 3 weeks maybe, as compared to 8 months, and yes, it's a little different, viewing this kind of content from Zoom and recording as compared to doing it, with more of a literally broadcast style, documentary filmmaking. But nonetheless, I believe the content really delivered on a high level. I thank you all who gave us feedback, and there were quite a few of you that gave us feedback. I thank you all for sharing that feedback and sharing your enthusiasm for it. So I could tell you is that, and I think you could tell even when I speak to Andy and how when we're here, we're really thinking about you. We're not just talking to each other, but we've got you in mind, and we recognize the range of predicaments that people are in, and it's a very trying time, and it's a very emotional time because of the level of uncertainty that's surrounding things. And I feel like we want to be a voice of hope, a voice of positivity, and that we're not ignorant or ignoring the tough times and the bad headlines and the things that are going on. But we also feel like we know we're all going to get through this, and we've got to see the light at the end of the tunnel. We got to move toward it, and in the end, I believe that the worst thing that anybody can do right now is be paralyzed, that they literally just freeze and don't start to look at the circumstances and figure out how they might be able to not even get through these circumstances, but maybe even succeed through these circumstances. So we talked about all kinds of things relative to crisis investing. We talked about the real estate market. We talked about the stock market and options trading and long-term investment and all those varying things. We looked at gold and precious metals and how and why people might want to be looking at those things. So there's so many considerations. And the other thing that we also know is that this is a very fluid situation. Day to day, things are changing, and when we recorded everything, that was at that moment in time, and now things have passed. I think that the vast majority of the content we presented is still holding strong as far as its applicability and value. But no doubt that some things are starting to change and emerge and evolve, and and it will continue to do so, I think, for the foreseeable future. So I'll just say that it's really wonderful to be with you. Also, and when I'm looking off to my left of my screen, I'm looking at the viewing page where you all are. If you'll notice that underneath our video here, you'll see a Facebook thread. And in that Facebook thread, you can just shout out, meaning, say, hey, this is so-and-so, and I'm hanging out from such and such a place. If you have actual questions, our customer service people are literally populating a spreadsheet for me over here with your questions. So Andy and I will be looking at and handling those questions along the way here. And my hope and wish and desire is to get through as many of those questions as we can and deliver as much value as we can to you. We do really appreciate this bond, and I could tell you if this pandemic did nothing else, it taught me how connected we all really are. I don't care what your race, your gender, your religious preferences, how remote you might live. Coronavirus taught us that we are all connected. It has reached everywhere in the world. Even when we are trying to isolate, trying to separate physically, it still cannot contain the connection between us, and the virus is evidence of that. So my feeling is, rather than being worried about you infecting me because we're connected, I want to celebrate that connection. I'm actually sitting here right now knowing that so many of you are out there, you're all over the world, all very different people, but all people. And we all have a spirit, we all have values, we all have a life that we're looking to live, and by virtue of the fact that this connection is between us all, and that the connection is something that in some respects is trying to be separated, I'm here to tell you that I celebrate our connection. I honor the fact that you're here, and I just really am hoping and praying to deliver every ounce of value that we can tonight, and that it somehow helps you. So by engaging, I think it will help you even more. I'll just shouting out, David from Maine is tuned in. Lori from Idaho is here. So Dave from Woodbridge, Virginia, welcome. Anna is here. Thanks for checking in. Philippe in Vermont, and Philippe and Linda, it looks like, from Vermont. Liz from New Zealand. And then some questions there that we picked up from Linda, Cheryl, Max. So tons, and again, I can't shout out to everybody. It's just too many of you out there, but I just want to at least let you know that, hey, we see you. You're checking in. Thank you for checking in, and you can see each other checking in. And let's jump into what we're going to do. Before we get into questions, Andy, this weird thing happened. It's like almost like the laws of physics are getting denied, which it's not quite that. But crude oil, when you looked at the price, went to negative, I think 37 and even above, maybe up to $40 a barrel, meaning they will pay you to take the barrel of oil. You don't have to pay them. How is that possible? What really happened there?
Well, you can have all the oil you want, and you can get paid to have it if you can find a place to store it. and that's the big issue. Is on a bigger picture idea is what a wonderful time this is to get our attention about things. Necessity is often the mother of invention. And so as the markets have been so violent, and as you said, it's such a fluid situation, and so much money is being printed, and people wonder what's going to happen there, that I've never seen in my lifetime more people interested in learning more and preparing more. I know that when I went to coach basketball on a high school team, I had to take a first aid course and a CPR course, because when someone needs it, that's not the time to be learning. So this has been a wonderful time. But as far as oil goes, I don't know how much boring detail people want on that. But what really happened is it really began with a supply war before coronavirus began. OPEC and Russia wanted to drive the price of oil down. And that can be very strategic for different oil producers, because when I was a kid, I remember, do you remember the Beverly Hillbillies, where Jed Clampett goes out every time it starts, and he's shooting at some food, and up through the ground comes a bubbling crude. And they become millionaires. And that's kind of how it is in Saudi Arabia. You step on something and, it's not a mud puddle, it's an oil well. So they can pull oil out of the ground for around $3 to $5 a barrel. It gives those OPEC guys a lot of power. Where some of the guys in the in the Dakotas in the U.S. that are frackers, they really like to see oil around $40 a barrel for them to make any money. So what happens is when you do a supply war, you drop your price. Yeah, OPEC makes less, Russia makes less, but by having this supply war, you can squeeze people out of the game, and the oil's so cheap that some people can't make money doing it. So who knew, Russia and OPEC? Who knew that when you guys decide to have a supply war, that we would have no planes flying and that we'd have no cars driving and no bus stations moving, and there's just no demand for oil. They're just sitting on millions and millions and millions of barrels. Well, you can stop me if I get boring.
No, this is great.
I don't know how
Yeah.
granular people want to get, but the way oil works is a lot of people want to trade oil without having to take it. It's kind of a nasty stuff. I mean, it's flammable. It can go rancid. It's sticky. It's gooey. It's kind of hard to deal with. It's messy, and so you need special equipment to pump it, transfer it, and store it. It's a dirty, nasty business. If you don't believe me, just go take a tour of a refinery. It is nasty stuff. And so a lot of people want to make the money on it, but they don't want to have to touch it. And so we have a market called a futures market. What a future is simply an agreement. So, Patrick, let's say that you are a farmer farming corn, and I am Kellogg's, and I want to make corn flakes. Well, you're nervous as a farmer because you don't know what the price is going to be, but you need to sell it to stay in business. And well, I'm nervous because I got to buy it, and I don't know what the price is going to be, but I got to buy it to stay in business. So you and I say, look, let's get some stability to our business plan, and let's just make an agreement in the future. You promise to sell it to me, and I promise to buy it at a certain price. And that way we get a little stability of our business. And if corn goes from $6 a bushel to 12, well, I win because I locked it in low. But if it goes from 12 to 18, well, you lose and I win because I get a good deal on the commodity. Well, what happens is when you promise to sell it to me, you promise delivery. And this is a real key point. When I promise to buy it, I promise to take delivery. And not everybody wants to do that. And so if you're going to trade a future and you're not going to be a person that actually takes the delivery, you got to speculate on the price of that commodity. It will affect the price of that contract. And then you got to sell that contract before it expires. So a May contract just expired. And so now you got to sell it and roll out to the June one. And there's a huge fund. I feel like I'm boring everybody, but there's a huge fund called the USO, the United States Oil Fund. They have about 25%, 30% of these futures contracts. And what they do is they do something called rolling forward, meaning that, if it was gold, you could just store it and back it by gold, right? If it was a stock like the S&P 500, just buy all the stocks. They don't spoil. You're going to have to move them. When it comes to oil, you have to sell your May contracts and immediately buy June or further out contracts to make sure that you're really having people invest in in something that can kind of follow the price of oil. And here's a new word people can learn if you're interested in financial education called contango, meaning, I don't think I'm going to get a heart attack tomorrow, and I don't think I'm going to get one next week, but the further out in time I go, the less unsure what my health might be like. And it's the same way with prices. So the further out in time you make a futures contract, usually the more it's going to be worth, because you're able to lock in and have surety for so many months. So these futures trade in something called contango. And contango is not when you're getting a disease, dancing the tango with someone with coronavirus. Contango is not a disease. Contango is this idea that the June futures will be worth more than the Mays, and the Julys more than the Junes, and the August more than the Julys. So what happened was last week that made this go negative was all these people in the USO wanted to trade oil, but they didn't want to take delivery of it. They didn't want it in their pocket, and they didn't have any place to put it. I'm not in the oil business. I have no place to put it, and so I don't want to take delivery. And as oil began to plummet and people weren't using it, there's barges out in the ocean right now that are just completely full. All the containers are full. You know, they're putting it in their bathtub, I guess. I don't know, but there is absolutely, we are drowning. The world is drowning in oil right now. There's not a cubic container that can hold the oil. And so as these guys that did have some containers, maybe they could squeeze a little more in, as they watched guys saying, well, you don't want to take delivery, do you? Oh, okay, well, that makes it very interesting. I've become very popular if I have a container right now. So I think I'll just fold my arms and say, I'm not going to buy your oil contract. And went lower and lower and lower, and then went to zero. And I still sit there and I say, well, I'm not going to take your oil from you. I know you have to take delivery of it and can't. So I'll tell you what, how much are you going to pay me to take this oil off your hands and store it? So oil didn't go negative. It just it went negative because people didn't have a place to store it. And if you had a container, they'd pay you to take the oil. Now, some people say, why not just quit pumping? And that can happen. But because a lot of this oil hasn't been pumped yet. But my father-in-law is a dairy farmer. And if he can't sell his milk, he can't stop milking because those cows get sick, right? They're used to milking, and it would be an utter failure if he stopped. Oh, that was bad. It would be utterly disastrous if he stopped milking the cows because they get sick and it's hard to get them going again. Well, if you're running a rig out in the middle of the Gulf of Mexico, it's kind of hard to shut that thing down and get it going again. So I have to look at how much it costs to shut down my operation and get that stuff up the surface again. And it might be just cheaper to pay someone, because unlike milk that you can dump out, you can't light it on fire and you can't dump it in the ocean. BP tried that on accident. You know, they used to be known as British Petroleum. Now they're Broken Pipe. That's their new name. And so that's in a long-winded explanation. That's how you get negative oil prices. There's just no place to put it. So if you have a container, you can have it for free. In fact, they'll pay you to take it if you have a container to put it in. You have all
not
the
much
oil
you can do with it.
Yeah,
it's got to get refined.
Is your bathtub entry, Patrick? You want to put a little oil in your bathtub? They'll pay you.
I got a little space around here, but I guess I'd have to refine it, wouldn't I?
Yeah, you have to. Well, you can store it and then sell it to the refineries, but they're not buying because they have no place to put. I mean, the whole.
I was going to say, if they were buying, they'd be buying it low, right?
They'd be loving to buy it. The whole supply chain is just dead right now. And here's the danger, and this is a bigger picture lesson. Is a person. So my phone's been blowing up ever since coronavirus. Every day it blows up with a new question, right? What about this? And everyone. A lot of Johnny come latelys wanting to learn quick, right? And the bigger lesson is this: is someone looks at the USO as an amateur, this oil fund, it says, you know what, $3, $4? Oil's not going to be free. It's going to go up someday. I'll just buy this now, and then when oil's at $40 a barrel, I'll be rich. Not understanding that this fund deals with this. What we have now is super contango, and this can ruin that fund. That fund could be. Need a bailout. And another thing you might realize is like those farmers, it wouldn't be the first time we've had the government pay a farmer not to grow crops to keep price stabilization. Well, I would not be surprised to see the government pay Exxon not to pump oil because they want to keep the business strong and the industry strong, but they've done it with other commodities before where they've just said they'll pay you not to grow, pay you not to work. So it's it's an interesting time, you know.
And the reason I wanted to have you just review that is to just understand that the current circumstance has ripple effects that are things that are maybe hard to anticipate. Like, for example, and I think you said kind of what the crux of this is hey, planes aren't flying, buses aren't driving, people aren't driving. The demand went way down, and you see there's a backup of oil that now gets it to a point where it's negative $37 a barrel. I mean, people will pay you if you will take delivery on it. So that's just one example of how we're in this weird uncharted territory in the economy. And there are, and I believe we have a future because you're talking about food and the supply chain. Look at all these restaurants that are closed. They're not, it's a similar thing. They're not taking delivery of food. So who would normally be delivering that food? What are their stores? Is the food going to spoil? Is that going to interrupt the supply chain of food? I think a lot of things can happen.
Yeah, I mean,
And as we're trying to look at the macro view of this, just recognize that sometimes you might think, like you said, and I think this is what's really important. Wow, maybe it's a time to jump into oil because it's so low, but it's not that simple. There's variables in that equation that need to be understood before you just go charging in there.
You know, you deal a lot with health. You know, if I go, you know, I spend a lot of time in Iowa where there's the Palmer School in Iowa.
Yeah.
And there were guys that really respected the knowledge that went along with that. There were other guys that took a sign out in the front yard and pounded it and said, you know, chiropractor, come on in, right? And the respect for whatever it is you do and the education behind it is huge. And the lesson I would say why this is so important in your message of crisis investing is that there are life skills and skills for hire. And I can't think of another asset class that has more involvement with less education than paper assets like mutual funds and 401ks. Without millions of people involved, but not educated. And so when you get in a situation where it looks like there's opportunity, like USO's $3 a share, all of a sudden the novice thinks, well, this is no big deal, right? You buy low, sell high, oil's going to, and it may happen. You know, the USO might survive and you might have made the best play of your life, but you also could see some real problems if you don't understand what you're investing in. So another one to your point, Patrick, is, you know, we knew oil would be funky just because of the supply war, and, you know, like you say, the buses and airplanes have stopped. But we didn't know it was going to go negative, right? We didn't know it was going to be historically weird, right? We knew it'd be weird, but not this weird. So what I'm excited to find out is there's a lot of talk about modern monetary theory, which basically says, look, print all the money you want as long as you don't have inflation, if you can control inflation. Well, now we've been forced to print more money maybe than, well, we certainly weren't printing it before. And so we're really going to find out that, you know, okay, what are the consequences going to be? Is it going to be nothing? Is it going to be something? Or is it going to be like oil where it's like, boy, nobody saw this coming? And so the good news is right now, you know, I congratulate everyone sincerely because that's tuning in, because you can talk about wanting to do better and you can give lip service to wanting to improve, but a lot of those people don't show. And you guys have showed, and it just shows the sincerity and honesty of wanting to learn this stuff. And boy, what a great time to learn it, right?
Yeah, they say necessity is the mother of invention. So,
yeah,
so
for sure.
If we can, because I want to make sure we get some questions in, we'll go into a little bit of a lightning round on questions. You good with that?
Yeah, I'll do my best.
That's awesome.
The answer might be I don't know.
Yeah, well, we'll talk about it. I mean, we'll say, hey, you don't have a good answer, and we'll keep moving. Incidentally, David, thank you for checking in from Boston. Naomi, thanks for checking in. Gail from Maryland. Doug in Vancouver, Washington. Denny checked in from Kalamazoo, Michigan. Jay from Tallahassee. Melissa. Actually, Melissa's got a question. I'm going to just. It says, "Is there any concern you have regarding giving all my personal information to Webbull or Webbull? I don't know what that is. Do you?
Is it
Webull?
Well, I'm not sure. I know that right now there are a lot of online meetings going on. And a lot of those online meetings require you to log in and do different things like this. So I don't know if it has something to do with that.
Yeah, because I know they're talking, actually, being even on Zoom talking about that's not all that secure. I would guess, I would say that anything that doesn't have very good security, that they're built for security when it comes to putting in any financial information, credit cards, bank accounts, if you're on a TD Ameritrade or if you're buying something for Amazon, that stuff is really locked down and well protected. If you're on some kind of a service, I'd be very careful about putting information across that. That was financial information. So maybe that's as good as we can answer the question. And so, Denny, I see you said that they signed up for the on-demand access on Saturday, still haven't gotten access. Yeah, so what happens, Dan, we're still in the same in the free viewing period, which is going on just for a little bit longer now. I think a few more days, and once that's done, I think the access to that you'll get will start. I think probably early next week. Our customer service people will be able to answer that. So, Justin, I know you're tuned in. Just make sure that maybe you can put a reply on Denny there and give him some more detailed information. So, Martha's got a question. Where do you think we will? Where do you think we are with the markets as of today? Do you think the bottom has already happened, and will we go up from there? All I'm going to say is I certainly don't know. I don't know, Andy, if you've got a sense of it.
Even when there's no coronavirus, that's the question I ask every day, right? The biggest challenge is up, down, sideways. Which one's it going to be? And the strategies I employ are a little bit different than what people would think. I'm not the type of person that says, well, I think this is going up, I think this is going down. I do two things. I trade in such a way that I can guess a range. So, for example, I don't think we're going to go bankrupt, and I don't think we're going to have a 100,000 point Dow. So I start there, and I start to narrow it down to where I figure out what the range is. And I think it's very realistic that we could have some movement within this top and this last bottom that we've seen for quite a while. And the reason I believe that could be likely is economically, it's obviously a downward push, but monetary policy is fighting that. And a lot of investors understand that you don't fight the Fed no matter what, because the Fed wins. When you print that amount of money, it causes inflation in asset prices. Now, if the money went into goods and services, those would inflate. But a lot of this money that gets printed goes, unfortunately, the rich get richer, right? People that the banks and the people that get money from the Fed, they dump it into assets. So while I would say that we're going to have horrendous earnings, horrendous GDP, definitely, a recession is supposedly negative growth over a few quarters. Well, we're going to have horrible GDP numbers. Everyone knows that. But we're also seeing money poured in at an unprecedented rate. So that's why, this battle, I see it kind of being in the middle. And who knows, tomorrow we wake up and there's a 2,000 point rise in the Dow or fall. So it just speaks to knowing how to hedge and how to do it the right way.
Yeah, and I think we can get a feeling about it, but it's really pure speculation.
Absolutely.
And and that's why and go back and watch Andy's video, because this is where he has you understand. There's ways to put on trades that you can hedge for one versus the other and still make money. And that can prevent you from really placing what I think is a casino bet on that you think the market is going up or going down.
It's such a great question. Well, I was going to say, it's such a great question because it's the question everyone is asking, right? What's up, what's down? And that's the one you mentioned, that session you and I had. That was the real question we wanted to answer in that session. So yeah, go check it out.
So thank you for that question. Naomi said, thank you for the oil talk. I got out of Aramco just in time before the drop. Well, good for you, Naomi. You can now profess to be a genius. You saw it coming.
Dodging the bullet.
Good job. Cheryl Ann Fulton's got a question. She said, after watching Adam and Advantage Gold, I decided to purchase some gold coins in my Roth IRA. Good for you. However, the premiums are way up now because the mints have been closed. The spot price today was around 17, which is above what what they say an ounce of gold is worth. And the buying price for an American Eagle, I'm sorry, the spot price is 17.14, but the buying price for an American Eagle coin was 18.89. So the spot versus if you want a minted coin.
Yeah.
Is it better to wait until the mints reopen? The risk there is that gold will continue a steady and rapid rise. I am inclined to wait a little while. So do you have an opinion about that, Andy?
I actually do. I purchased in the month of early March, when the Fed began to talk about printing more, I went out myself and I purchased a significant amount of Golden Eagles, the one you just mentioned, all types of sizes and denominations. And I knew that I was probably buying close to the top of the market. So I'll give you my opinion on gold. Number one, gold is not an investment that cash flows. So unlike stocks that pay a dividend and real estate that pays rent, gold sits there. So I don't like gold for an idea that, well, I'm going to buy it and then it's going to cash flow. Well, that leaves me with two other things I could use physical gold for. I could try to time it. I could try to buy it low and sell it high, which is, boy, should I wait and get a lower price? And then there's a third way to look at gold bullion, which is how I look at my gold bullion, is I say, this money I'm saying goodbye to forever. As a matter of fact, I see it as an insurance policy against the dollar that is falling. Well, I insure my home and I say goodbye to that money. And my home goes up in value. It didn't burn down. Dang, I shouldn't have bought insurance. No, of course I feel better sleeping at night. Car insurance, I say goodbye to that money. It's an expense to me that way. Well, I feel very much the same way about my gold bullion, that if I buy gold bullion, for me, the only way I'm ever going to spend that is not to try to time the market. Say, well, now it's time, maybe I'll sell. It's if we hyperinflate and I'm forced to use that insurance. The best case scenario for me is I buy gold. I bought it at like 1640, I think is where I got mine. I buy a bunch of 1640 and my kids inherit it. My great grandkids inherit it and it never gets spent. So if you're looking to buy gold as an investment speculatively to buy low and sell high, boy, I'd recommend listening to people smarter than me. But if you like the idea of having a little gold, I believe in having a year's supply of food myself. Having a year's supply of gold somewhere in a vault is a good thing for me, at least that, for emergency. So I look at buying gold, and the insurance was expensive because the risks are high, and so I'm going to pay the insurance just like I do with my health insurance or anything else. So I don't know if that's a good answer, but that's my answer. Great question. No, I think we need your. I lost your video or your audio.
I'm there. Sorry, yeah, I was muted. Thanks, Andy. So I think that your perspective is important to hear, and I know varying people play different ways. But in the end, I think gold is something that you buy and hold, and you got to be thinking much more long term, I think, than in short term turns with gold. And anybody, we had a full segment with Adam on this that you can revisit if anybody wants more information. I like so we got Trey Stafford saying gold is a wealth protector. I agree with you. I do, and especially if you're looking at the dollar and the printing money and inflation, gold's I think a good thing to be holding during those times.
We'll find out.
Mark, what's that?
We'll find out. I mean,
we're going to find exactly. We will find out for sure. Marta said, "Will this webcast be recorded so I can rewatch later?" Yes, we are. We are recording it, and we will have it posted for at least some period of time, some days, to be able to view it later. Michael Brown said, "Webbull is a free trading app." Okay, so just not familiar with it, and I would just look it up just to make sure that they are. Not, how can I put it? I don't want to be insulting, but not fly by night, but they're very well substantiated.
You do have to be careful with that stuff, because especially if it's offshore and it's not, SEC connected and investigated and reported, got to be careful with that stuff. But I'm not.
Look it up.
I feel a little bit ignorant because wasn't sure what they were.
Well, and I have to say, by virtue of the fact that we're not familiar with it, makes me a little suspect, because we've seen a lot of stuff. So that's why I'd say make sure you're looking deep into it. Well, this is, and I'm going to get to the spreadsheet incidentally, because my customer service people are just texting me saying, "Hey, get to the spreadsheet." I'm reading right off the thread because there's so much here. This is sorry. Looking back at my notes, it was stockpile. I guess you had an earlier question that I missed. It was stockpile and Robinhood that you use for beginners. Are they safe to give a social security number to? So yeah, stockpile is well established. It's a great kind of starter thing where you can buy increments of stock. At Robinhood, I would say is fairly well established. Do you feel comfortable with Robinhood, Andy?
Yeah, I prefer to make my own decisions and use my own trades. But I from what I've heard, Robinhood, I don't know how the results are, but they're not going to steal your money.
Right. Yes.
Yeah.
Exactly.
They're not crooked as far as I can see.
Dave asked an interesting question. It says, we want to buy our first home. Should we wait a little while?
Interesting question. I think having a home, Robert Kiyosaki got in a lot of trouble with Rich Dad Poor Dad when he said your home is not an asset. That doesn't mean you don't buy one, because your home is the school for your children. It is a refuge from the storm. It is a protection against the world. And so if you're going to use some debt to buy a home, I don't try to look at buying a home as investment. Like any consumer, I want to get a good deal, but I think it's so hard to time the market that think of it this way. If you went to Nordstrom and you picked up a pair of blue jeans, and the lady said, "Can I help you?" And she says, "Oh yes, these are, $180 jeans," or whatever they are, and you liked them, and to you say, "You know what? This is worth $180 to me." Next week, they might go on sale for 10% off, and you say, "Well, doggone it, I wish I would have waited." But you know what? You're still happy with what you paid for it. So if you look at your monthly payment and you say, "Boy, this is a home that I can raise my family and enjoy, and I won't feel bad about paying this," you might be happy that you got in now. If it goes up, the housing may go down. Very tough for me because I'm not a real estate expert, but I will say this. Interest rates aren't going to be going much higher anytime soon. And, if you're getting something in the twos, the high twos, low threes, someone comes out and gets a one later, well, you can always refinance it. So as far as interest rate goes, that's great. As far as pricing goes, yeah, we'll find out. So that's the best I have for you.
Talking, I did do some interviews with people in real estate, and it's a mixed bag like everything else. Everybody's gazing in a crystal ball. I think Karen said, "No crystal ball here in Brooklyn, New York." So,
oh yeah,
that's a great comment, because the reality is that the prevailing feeling was that the likelihood, but nobody knows, is that prices are going to, in real estate, are going to come down a bit.
Yeah.
And we can look at previous things, and this is different. But 9/11, I think real estate really tanked, and in a lot of areas it came back strong after a while, especially in New York City, but and other places too. But there's no way to know. So I guess I think to Andy's point, if you are in need of a home right now and you want to invest, I wouldn't feel bad, because you're going to be there probably for some period of time. But if you're sitting there saying, "I'm in a comfortable position and I'm just looking to find my right deal," and you got some time, my own complete speculation is that you're probably going to see prices squat a little bit, in the coming months. But I can't say that for sure. So it's just a matter. You use your own judgment. Nobody knows. The experts I spoke to felt that prices would come down a bit. I know that, still speaking to some real estate people, I know that they're brokers and work in the industry. Certainly, there's been sort of a massive slowdown of people looking to make transactions right now. So that usually is going to have a downward effect on prices. I got one more here, and I'll go to the sheet. Michael says, if you were sitting on $250,000 in cash, what is the best investment strategy for a 50-year-old? So that's all you, Andy.
I would buy all of Andy's courses. Is what I would do. No, I get that question probably 3 or 4 times a week with the various amounts of money, right? Part of me says if I was 50 and all I had was $250,000, I got to get going, right? Because that's not a lot if that's all a person has. And a lot of people, this is such a great question, though. It's such a great question because it gives us an opportunity to talk about something very, very important. And it's the first decision you make. Is people either want advice or they want education. And that's the first thing I would start with. Is I look at, if I was sitting on that 250,000 like you are, and I was looking at it, that's the first question you ask yourself. If you just want advice, then you're going to take a lot of that 250 and pay advisors, and they're going to make those decisions for you. And then you're going to get into, well, should I put in real estate or stocks or both or gold or all this? But if you go the education route, which is the one I always like for me, the one I advocate for, you're not going to have to ask that question anymore, which is a really important thing. No one cares more about your money than you. And so if someone says, hey, Andy, should I buy gold? And I say, yes, they haven't learned anything. They haven't got any smarter. If I say no, they still haven't learned anything. They haven't got any smarter. But if I say, well, let's take a look at gold. It's fungible. So my question back to you is what are you the most knowledgeable about? Because really understand this. Risk, Patrick, I hate to do this. Can I draw on my board again to answer this question?
Just remember, we got a bunch more to get to, so you got to do it.
I'll make it quick.
Yeah, that'd be great.
I'll try. Well, maybe I can't even get to my board here. I might. Let me see if I can get it. I'll do it real quick.
Good.
There's two ways to look at this. One of them is you look at risk and reward that goes like this. But then you look at risk and education, and it goes like this. This is about the investment, and this is about the investor.
Brilliant.
So the answer I give you about your $250,000 has a lot to do with, well, what do you know about? What education do you have? What are you good at? Because if I say, well, I really like stocks, well, I probably have more experience than most people in stocks. Kenny McElroy might say, well, real estate's where you want to go. Well, he knows more about darn near anyone I know at that. So when you ask the question, what should I do with $250,000? The question I'd ask back is, what do you know a lot about? Because that's probably where you should play.
Yeah, there's Garrett Gunderson talks about the ignorance tax.
That's big. Oh, I've paid that.
Yeah, we've all paid it. My friend Rick Sapio, who we interviewed for a series coming up, he calls it tuition.
School of Hard Knocks. School of Hard Knocks. School colors, black and blue.
Yeah. So, and actually, to this point, let me just let people know. Based on the response that we've gotten, and we thought we wanted to do this, but we weren't sure there'd be a reason to or a demand to. But we're going to have an ongoing, more in-depth training course with the experts, many of the experts that were in crisis investing, some that weren't, extremely affordable. It's literally less than a third of what we normally charge when we do these kinds of master classes.
That's awesome.
But this is going to be going prospectively into the future, weeks and months here while everything is happening. So you'll be right on the ground, right in it. So if this is something that you are interested in and you want to get educated, and I love the distinction you mean between investment and investor, but if you want to become an investor and what I would call a crisis investor, because different kinds of rules and considerations now, you can go to right under our image here where you're watching us, there's a thing that says get ongoing expert access. Click that, and then you can, all the information is there. And you can look at the pricing, what the course is, et cetera, and then you can decide if you want to join that. Certainly Andy's courses, we'll be letting you know about his courses too, because we've recommended his courses before this ever happened. Now we're recommending them even higher now. But bottom line is, this is. I think you should get educated, and we certainly can give you again a kind of a broad context with experts in the trenches right now during all this, and we have the information there. I certainly would highly recommend it if this is of interest to you. There was one comment I wanted to read here. So Janie Bouchard said, just read Andy's book, 401 Chaos. Very eye-opening. Definitely interested in learning more about options trading. Thanks. So again, we'll be getting you information about Andy's courses. Just stay on the list for Crisis Investing 2020. We have things like Andy's courses that we're going to be putting out in front of you. We'll also hopefully we have so many questions. Maybe I'll try to twist Andy's arm, get him back for another sessions at some point in the future too, because he's just such a great wealth of knowledge. All right, I'm going to make my customer service people happy. I'm going to the sheet.
All right.
There's sorry guys, this was we have a really big audience for crisis investing, and the audience engagement was really very, very high. I mean, people didn't just sign up, they watched, which is very gratifying for us when we do all the work that people are actually consuming it. And hence we also have all these questions. So I'm going to look for questions that are a bit different than things we already answered, because that way we're not redundant. So I apologize if you asked a similar question, I didn't get to your specific question. It's just for that reason. Let me see. My husband was going to retire in June. As the pandemic came in like a storm, he lost $125,000 in his 401k and lost his job, and now on unemployment. Bad combination, huh? His financial advisor put him on a level 3 status, which I believe things were changed around for now. How long will it take to recoup the funds that were lost? That's from Edie.
Boy, Edie, first of all, my heart goes out to you and your husband. We mentioned earlier that this isn't just a financial tragedy. Behind all of that is a human tragedy. And this happened to a lot of folks in 2000 and a lot of folks in 2008, where it was just bad timing. I had the person who invented the 401k on a podcast recently, Ted Benna, and he's just devastated because he knows that this could take a long, long time to recover. Hopefully it doesn't take too long, and you're going to be rooting for modern monetary theory. You're going to hope that the printed money can drive it back up without hurting your inflation on the spending side. Never a more important time for you guys to get educated. And I say that from the bottom of my heart with emotion. It is a shame and a crime almost that our school system teaches us to get a job for 30 years, but gives us nothing for the next 30 years, where 401ks force us to become investors when we weren't trained for it. So I can't tell you how long it's going to take to recover, but I would learn as much as I possibly could, and use your team, use your advisor, but make sure he's a good one, or she, and make sure that you can ask them intelligence questions to find out if they know what they're doing. So that's, I know we have such a short time. That's such a big question. But once again, learn as much as you possibly can, because you could be in for a long wait for that to recover. Wish I had better news than that.
No, I know it's. I'm like you, it's a little bit of a game of musical chairs, and people who are on the cusp of retirement and have something like this hit and go through all this. It's
it flips you. Think about this. Now, for a person that's supposed to retire in June, they're supposed to sell the asset high now, right? They were supposed to buy it at half price and sell it high. To get the same amount of money, he's going to have to sell, about 25% more asset right now, or maybe 15% more asset right now in the spending phase. And it's a huge problem with 401ks. One of the reasons I wrote my book on 401 chaos is, unfortunately, we saw a lot of this coming.
Yeah, there's a lot of questions about
coming, but
yeah, and there's a lot of questions relative to this. Oh boy, man, we're gonna have to come back and just hit more questions. I'm just sorry, there's no way to get through them. So Marcia says, "Thank you, Patrick, for introducing us to these gurus, each in their own right. Very important thoughts for this troubling time. I listen because what does one do with a bed and breakfast and award-winning restaurant that you cannot open? I guess go with Mr. Harnish. Launch or relaunch, certainly a thought. When we get to the new place 6 to 12 months from today, it would be interesting to see if we arrive there with 2020 vision." Yeah. So what I could say is, depending on how you're positioned, and I have seen so many people through ingenuity just figure out things to do. And I think maybe told the story, like right here in Salt Lake City, Pat's Barbecue. Man, they were forced to shut down like every other restaurant, but there is pick up and drive through, and they literally went and Three guys that owned it, entrepreneurs that were handy, with their skills, and they went and bought a bunch of lumber, and they built a little kiosk to do the takeout and the curbside, and now their revenue is actually more than when the restaurant was open from doing, because it served an inch of people still wanted to be able to go out and get food. They can't go sit in the restaurant. These guys weren't really set up for it. They took 3 days and used their hands and their grit, and they got something built and then got back to business. So I believe that everybody who's challenged right now is just one good idea away from overcoming that challenge. And what doesn't create the idea is being in fear and panic. That's a different part of your brain. That's your midbrain that you're using when fear and panic is there. But if you can get past that for a moment, even if you have to recognize it, I don't believe getting past fear or panic is just saying is just trying to pretend you're not. It's acknowledging, okay, I realize I'm feeling a lot of panic right now. However, I also recognize, manage that and put it aside for a moment and get into what the neocortex, the part of your brain that has creative thought. You can't be in both at once. Either you're in defense or you're in growth. In biology, there's a rule. A cell can't be in defense and growth at the same time. So if you're in defense physiology, you can't think in terms of growth. But if you're get out of defense physiology, now you can get creative. So with the B&B, and if you can't open it, you have an award-winning restaurant. What could you do now? Incidentally, what some people are doing, and let me say this because I think it's it's been really smart. They haven't necessarily figured out, how am I going to get revenue from this? For example, some yoga studios, what have they been doing? They have to shut down. People can't come and practice yoga. And, there's really not anything else. Some people say, hey, we're discounting some of our clothes and peripherals that we sold that we can ship to you. And they're trying to just figure out maybe small revenue or medium revenue from that. But they're doing things like this. They're doing Zoom classes. Now, they're not charging for it, but think about how smart this is. As soon as things open back up, they're creating a pent-up demand. Like, they're not losing the connection with their community. They're not losing the connection with their customer. They're finding ways through things like Zoom, which costs no money, or if you a little bit of money if you're going to get like pro levels. And they're staying connected and creating a pent-up demand so that when things open back up, they're going to really hit it hard, as compared to saying they got to slowly kind of rebuild back up. So what I'll just tell everybody is that, I think you're just one good idea away from having a breakthrough that can really salvage what could be a pretty tough situation. And my hope is that, like you mentioned Vern Harnish, we have Andy here and so many other great experts that we had. My hope is that what this does is it keeps you stimulated. This is why we're doing the ongoing program. It's like, we don't want to say, okay, hey, this was great, it's over, and we're done. We'd say, take a little bit more of this journey with us. We want to keep your headspace right. We want to keep filling you with ideas and knowledge. We want to build your confidence, and so that you can step into a future. Because I can tell you, I don't think that it's going to go back to the way things were. We're going to be creating a new normal in our society. And right now there is going to be wealth transfer, and that's going to be ongoing wealth transfer for a while. And basically the people who are bold are going to step up, and they're going to learn new things, and they're going to think in new ways, and they're going to end up being okay. There's going to be people who are challenged because they're about to retire. They saw a bunch of their retirement evaporate, and they're either going to be in fear and panic around it, or some people are going to activate and say, okay, I have to let go of the plan that we have. That plan is over. I have to make a new plan. And my intention is that I'm actually going to end up retiring better than I would have otherwise. And that's going to happen for some people. And I'm here to tell you the difference between the one who ends up who's compromised and the one who ends up in a better retirement is their headspace. It's not the smarter one. It's not the one with more research. It's just the one who decided that they're going to take a stand, and that they're going to not let the circumstances define them, but they're going to take a stand and create a better future for themselves and get activated on that. And that's what I'm hoping through the work we're doing that we could deliver to you. So sorry for my tirade there, but I feel the pain. I mean, I feel the concern, and as I feel that, I just want to tell you that it doesn't have to be a bad outcome or a bad story, a bad ending to a story. It can be something better than you could have imagined, and that's what I'm hoping to inspire you toward. So anyway, sorry, I got a little.
No, that was awesome, because it's exactly right. Investing isn't just about knowing things. Investing for me and entrepreneurship has been a personal development, temperament, toughness, resilience, change, creativity. Those are all benefits to the journey we're all in together. So that was fantastic. That was my favorite part of being here. So that was pretty awesome.
Thanks, Andy. We've got Tom Cook. He says, Paul St. Pilzer talked about selling at a loss and buying back at the same price to lock in capital losses. But if he likes the stock enough to buy it back, he must expect it to increase in value. If it increases back to the original price, he faces a capital gain for exactly the amount of his locked-in loss. When he buys it back, he sets a new basis. Seems like a push to me. No tax help at all. What am I missing? Well, a few things. Number one, incidentally, you can't buy back the same stock right after you sell it. If you want to have a capital loss, you have to wait 30 days. I think it is, Andy, right? Yeah. So on 31 days, you can now buy back the same stock because they don't want people to be able to play that game. And Paul explained, so you can go back and watch it. But understand, the capital loss that he locks in, and he explained the tax ramifications, how it can carry forward, and he was very transparent. It was a $4 million capital loss for him, I think, if I remember correctly from the interview. And he said he wanted to lock that in. He believed the market would go back up, and at this point, it really has gone up quite a bit since we had that conversation. So in his case, he was right. But what he also had all these gains from other business enterprises that were coming in. He just got a big check he talked about from a business that sold. So he locked in those losses right then at a good time, knows that he's going to be offsetting a bunch of gains, getting a big tax advantage. And for him, he said he might go buy other stocks. Now, it may never go back to where it was. So that means it's not a push. And of course, it's the timing, because there's this thing not only called what's the net result, on a balance sheet, 2 years from now. There's this thing called cash flow. How much cash does he have today, as a result of not paying all those taxes? Because think about it, if he had to pay all those taxes, he doesn't have the money to go back into the market, right, and buy as much if he thinks that things are on sale. So it's a matter of timing of cash, being able to recognize losses, preserve a lot of his cash flow because he doesn't have to pay a heavy tax burden, and then having the liquidity to make some decisions about what to do. So anyway, I think that's a kind of a short answer. I don't know if you have anything else you might want to add to that, Andy.
No, I think the bigger lesson there is Paul is in tune with his own financial statement where he's at, and he's not looking around for someone else to drive his ship. And the fact he has other businesses that he says, look, I'm making a boatload over here. Maybe it makes sense for me to do this. But the bigger lesson is what's good for one person might not be good for the other person. And that's the problem with advice again. So that's good.
Yeah.
Good stuff.
And thank you, because of course that just goes to show you how much more of a pro at this you are than I am, because that's exactly the right thing. Is everybody's circumstance is different, and that's the first thing you think about. I didn't think about it, so thank you. I'm a host. You're a pro.
So, I'm a student. That's it.
Yeah. Well, may we all stay students till the day we die. Just a quick one, because I know we're running to the end here. And again, everybody, thank you so much for all these questions. And I will, I'm hoping Andy will come back and we'll hit some more of these at some point in the future. It says, do they, and let me just remind you that we're towards the end here, is that there is that, because my people are going to get upset with me if I don't mention this. There's a button under us called Get Ongoing Expert Access. Just take a look at that and see what we're offering. It's really the most inexpensive thing we've ever done as far as offering this type of a thing, because just the circumstances. We plan on over-delivering as far as value, and I'm excited to continue to keep bringing that value to you. And just check that out and see if it's right for you, because if any of these subjects, this conversation is something that you're leaning into, we're going to be going deep and getting granular. And you'll have the ability also with these experts to ask your questions. It's going to be a smaller group, and you'll have a lot more interaction. Let me just get to that other question. There was one last one that I think was just a simple one here about, no, that wasn't it. It was from Stacy. She said, do they have trusted websites they recommend where we can go? And I think she's talking about you and I, that we could recommend where we can go to learn more info on investing. So I guess, what I would just say is, number one, I think there's a lot of good, kind of free fundamental resource out there. Number two, Andy's got great books. Some people are already mentioning about them. Number three, Andy's got phenomenal, very deep dive courses that step by step walk you through from being a complete novice to really getting to mastery, and doing it in a safe way, making sure that you're not going to hurt yourself. And we're going to send you some offers on that, saying, hey, here, this is what's available through Andy, and you'll get those. And number four, like I said, our course, I think, would be something that would be worth taking a look at and seeing if that appeals to you. So there's options for you, and our job is not only our thing we're putting together, but other things that we vet. Like we trust Andy with our lives. So if we're putting his course in front of you, it's because we really believe it's going to way over deliver on its value. So we're going to be vetting things and putting them in front of you. So I know that we're a little bit after the hour now, and thank you all for your questions. I'll take this one more. Dave Meehan. Patrick, after all your interviews with all the experts, what do you think is the best use now of our available capital? Oh, don't put me in that position. I have to give you the Andy answer, and the Andy answer is it depends, right? In other words, it really, are you in your 20s and single, and you've got your whole career and future in front of you? Are you towards the end of your career and you're trying to get to retirement at a certain stage in time? I mean, there's so many variables. I really don't know how to. I can't answer that question, and maybe more. You can give us more detail on it for next time, and we can answer it. I don't know if you have a better answer, Andy, but
no, that is the best answer. Usually, when someone asks me that, because that's an advice that shows the advice world we're in, right? Tell me what to do. Tell me what to do. It really is a context that Wall Street has created, right? Ask advice. It's someone else's job to tell you what to do. But when people ask me what should I invest in, I say, A, what do you know the most about? And they think, well, what is it? And I go, if you don't know anything, what would you like to know about? What are the asset classes, whether it be real estate or stocks or entrepreneurship or business or commodities? What gets your blood pumping? That's your next course. That's your next course of action. What are you interested in? Because if I say go buy stocks like me and options, but you don't know anything about that, I'm throwing you into a horrible den of misery. It's simply awful if you don't understand it. Awfully simple if you do.
Great. Thank you, Sam. That perfect answer. Thank you so much, Andy. And looking at me, I look like I'm in the shadows. It was bright sun out here earlier. I had a light on over here to balance it. Now I'm Dr. Jekyll and Mr. Hyde. Anyway, folks, first of all, Andy, sincerely from my heart, thank you so much.
Thank you.
You always answer the call. You show up. You give everything you've got every single time. So just thank you for being who you are.
Oh, thank you for having me. It's such an important time, and if I can offer a few things, along with so many incredible people that you've brought together for crisis investing, what a great opportunity for me to learn and participate as a student, and offer what I've learned so far as a teacher. So I just love you. You know how much I love your whole team. Thank you for what you're doing for our human family in a very uncertain time.
Thank you, and we're sending our love right back at you, and also to you who's tuning in. We certainly are talking about a lot of things in our head, but we hope that we're also delivering our hearts to you. I'm for anybody who's watching and is struggling, I'm so sorry. And I just hope somehow what we're doing here is making a difference for you. And if it could just start to at least breed some hope that you'll get through this, and not only will you get through it, but you'll succeed through it, then I'll feel really good about the work that we're doing. We do put this out in the world, at no cost, so anybody can watch it. And then for the people who felt like it was valuable, they'll invest in it, and we charge a very minimum price for it. And then for the people who really want to go further with us, we offer the ongoing course that will come from it, and we welcome all of you. But whether you're here just for the ride on the free viewing, or whether you're going all the way with us, I just want you to know we care about every single one of you. And I can't help but say that there's going to be a bright future. There's optimism that can drive us forward as long as we don't succumb to fear and panic. So stay healthy. That's really important. And then keep your chin up. And I hope that our connection can continue on an ongoing basis. So at this point, we'll end this broadcast. Thank you very much for being with us. And again, Andy, thank you for being with us.
Thank you, everybody. And thank you, Patrick.